YouTube, welcome back. It's CalFX here and I'm back with another one. So in today's video, I'm gonna break down a trade that I caught and I called on my one-on-one session with a student. It was a beautiful trade on GU. I actually just recently made a video on GU, so make sure to watch it. It was a very good video. So this is basically going to be a little bit of a follow-up to that video. Where I basically was discussing the relationship between the time frames. And so in this one, I'm also going to explain the relationship between the higher time frame, medium time frame, and lower time frame. Because sometimes I get a lot of people that come to my DM, and I had some people that said, I was looking at the charts from the whole January and I didn't catch a good setup. So a lot of the time is because sometimes you have a break of structure on the 4-hour, price comes to your point of interest, you want to rush to the 1 minute, and then you get a lot of losses before you ride. Because this actually tries to function in some sort of predictable way. Sometimes you have a 4-hour break of structure, price comes back to your POI, you need to wait for that medium time frame, especially if you want to enter on a lower time frame for better risk to reward ratio and higher probability. You need to wait for all these confluences to come together. So if you have a high time frames, let's say for example as an intraday trader, your higher time frame is supposed to be the daily in 4-hour. So I would even advise you to just keep the 4-hour as your higher time frame as an intraday trader. Then medium time frame, you can keep M15, M20 or M30, lower time frame M1, M2, right? So on this trade, I'm gonna basically explain how I went from the higher time frame. I'm gonna start from the monthly, even though we don't need the monthly, right? But I just want to use the monthly just to decipher what's the overall intention in GU for the long term. So let me start from the monthly time frame, right? So looking at the monthly time frame, it's very clear that GU is on a bearish trend and the intention is absolutely bearish. We had previously a break of structure here, price came back to mitigate the order block. We had another break of structure, price comes back to this order block. Then we had another break of structure, price is coming back, just came back to this order block, and now we expected to see GU coming all the way down, taking the previous monthly low to continue the overall bearish order flow. So that's just to decipher the overall long-term intention on GU. Price comes to my monthly supply zone. What am I looking for? Weekly change of character. So he had a beautiful weekly change of character here. Nice supply zone. Price just tapped here and now it's having a good reaction. So far it's respecting the weekly. Then we can drop down to 4-hour slash daily, right? Now this is 4-hour as an intraday trader. We're just looking at the 4-hour slash daily. So on the 4-hour, we had the first break of structure here. So this was the break. Price came back to this supply zone, and then we had another break of structure. So the order flow on the 4-hour has been confirmed that we have shifted from bullish to bearish. Simple as that. So price comes back to my 4-hour supply zone. What am I looking for? So as I said, as an intraday trader, 4-hour is my higher time frame. So I need that step-by-step process, right? I need my higher time frame, my medium time frame, and then later lower time frame for entries. So if price comes to my 4-hour and my 4-hour is my high time frame, what am I looking for next? Medium time frame. So medium time frame, we're going to use M15, M20, or M30. So I'm going to drop, for example, price came to my 4-hour supply zone here. Okay, good. Let me drop down to M20 time frame. I need to see a change of character to the downside, right? So once price comes here, if we read the structure, we can see we had the previous high, then we had this low, then we had this high. So price here even failed to close above. This was just the first sign of bullish sentiment in the market and depletion, and sellers actually stepping into the market. So we have this beautiful change of character to the downside. Now we have 2 points of interest here. We have this one at the top, the extreme one, which was the catalyst move that caused the change of character. And then we have the decision when price came to this demand, it kind of pulled back a little bit before the violation. So some people call this demand to supply flip. It's all the same thing, right? It's order block, point of interest. So the first one is this one, very correct. So if you identify this one as an order block with imbalance, that's absolutely correct. So this was the decision. So I was on my one-on-one with a student, and we were actually just doing the usual lessons on the mentorship and correcting some stuff, and we ended up checking this actually playing out. It was during the New York session. So once price came into this point of interest, I remember news had kicked in. That's what we had this week. But my intention is to see price to continue all the way down. So this week wasn't enough. We need to see the body closure below the previous M20 previous low, below the previous M20 low. So once price had tapped that supply zone, what I did, I dropped down to 2 minutes time frame. So now you guys can see 4 hour done, medium, which was our high time frame. Medium time frame is bearish now. Now we can drop down to lower time frame. So that's how you establish high probability setups right here. So price this was the news, right? Price was attempting to break, but it failed. It started to push up. So I said, okay, if this supply zone still holds, price doesn't go above, I'm gonna be looking for sales all the way down to right the M20 body closure below the previous low. So I was looking right here as the price was playing out. So me and the student on the one-on-one, we was looking at, we wanted to have that double confirmation, even though, I mean, if you look at it, we had, once price had tapped the point of interest, we had this change of character right here, and we can see the inducement here. So if you chose this point of interest, I mean, you were just right? I mean, you would have hit the TP right away. So I wanted to wait for my double, triple confirmation right there. So what I saw was we had this break of structure right here, right? So I was monitoring the break of structure. So we had the first one right there. Price came back to mitigate the order block. And then we had the second break of structure right here. So we had the second break of structure. So let me just play price a little bit. Price came back. So actually I was looking for the seconds confirmation, because I enter all my trades on the seconds, although you don't need the seconds. A lot of my students, they don't, some of the students don't use the seconds time frame, so they're totally fine with just entering on M3 and they're done for the day. So I ended up looking for this. So I said, okay, that's another mitigation since price respected the supply zone, and this was the order block that I marked for the student right there. So this one right here, that's the one we were looking for, and we was actually monitoring the seconds as well. So right here on the right, you guys can see that that's when I sent to the student the signal. I even sent with the price and stop loss, because we were just having this one-on-one session. So for me, it was totally fine to just send him the entry price with the stop loss. It was a beautiful 2 pip stop loss, you guys can see there. So I waited for price to come back. The signal actually was based off the seconds confirmation, right? So once we waited for price to come back to our third confirmation right there, that's when we had the entry. I think I had the entry somewhere at I think it's 58, right? If I'm not wrong. So I believe it was 58, and we had the 2 pip stop loss right here. So let me just keep it 2 pips right here. So as you guys will be able to see, just targeting the M2 previous low, we had a 1-to-11 risk to reward ratio. I mean, this, for a lot of people that have a 9-to-5, imagine you just come to the markets. I mean, you have this kind of trades. This just took about, if we look at the window that we started looking once price came to the POI, it was just, it was on a 2-hour window only, right? And the whole setup, you guys will be able to see, we got tagged right there into the trade. And you guys can see that TP was smashed. So just from the entry all the way to the TP, price just took about 18 minutes, 20 minutes. That's it for price to hit 11%. So if you risk 1% here, you would have made 11% in just 20 minutes. So the idea was to see price to continue to push all the way to M20. So we had a 1-to-11 right here, all the way, just targeted the 1 minute previous low. And the intention actually was to see price coming and close below the M20 previous low. Remember when I said that, right? So price just closed below. And if you look back, that's right. I wanted to see price also coming down to take out this low right here. So let me just play price, because price actually ended up pushing a little bit more after that. It was just a beautiful, beautiful, beautiful trade on GU. So let me see where price peaked later on. Right, so price ended up peaking, I believe it was 1-to-25 on this one. Exactly, it was 1-to-25 risk to reward ratio. And you guys can see price actually went back up to the extreme point of interest right here. right? So this was the extreme. It even ended up coming to the imbalance right there and started to push all the way to the downside. So you guys at the right have the MT5, that's the execution. You guys can see that that's exactly the same entry price that I sent to the student on my 101. It was a beautiful 1 to 25 risk to reward ratio. It just shows the power of scalping. I tell people all the time, scalping is where the money is, right? So I mean, that's it, guys, for the breakdown. I mean, it was supposed to be brief and simple, and I hope you guys were able to understand the relationship of the higher time frame, medium time frame, lower time frame. That's basically how you'll be able to have high probability scalps. And this actually is happening every single week. If you just keep 3 to 5 pairs and you do the same exercise, use your 4 hour as a high time frame, medium time frame just use M20, M30, M15, and the lower time frame M1, M2. You just, once price comes to your medium time frame point of interest, wait for a change of character, and boom, that's it, right? Simple as that. Is very repetitive, and that's how we stay consistent. So if you guys really enjoyed the video, I mean, show some love in the comments. Let's hit the like button, guys. I'm trying to hit 2K, so let's smash the like button so this video can be recommended to more people. If you're new to the channel, if you haven't subscribed yet, let's hit the subscribe button, and I'm gonna see you guys in the next one.